Welcome to Get Rich Education. I'm your host, Keith Weinhold. Today's boom in one agricultural crop has been likened to a modern-day gold rush with both its industrial usefulness and being known to help all kinds of mind and body ailments within agricultural real estate. Where does the opportunity therein lie for you, the investor? Also, comparing turnkey investing and real estate syndications today on Get Rich Education. The company that's provided our listeners with more loans than anyone is Ridge Lending Group, NMLS 42056. You can finance more than 10 single families up to fourplexes. Serving most U.S. states, their knowledge and experience leads to your financial freedom. They're number one in the investment space. Pre-qualify and then chat with President Chaley Ridge personally. Start on your next investment property loan right now at ridgelendinggroup.com. Finally, Total Control Financial gives you checkbook control of your 401k and IRA money to invest in real estate. It's time to get your retirement money into your own checking account, but you've got to avoid the little-known tax that you'll pay with any self-directed IRA. Instead, it's time for the QRP. Learn more and get your free copy of the QRP book by text messaging QRP in all capital letters to 72,000.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Hey, you're inside Get Rich Education. I'm your host, Keith Weinhold. You're back in that abundant place where you don't live a day below your means, you know, to instead expand your means. One of the greatest agricultural real estate and commercial opportunities of this era could very well be cannabis. I also think that it's often misunderstood. In fact, it wasn't long ago at all that I educated myself to learn more. Now, hemp is a strain of cannabis grown specifically for industrial uses and not for anything mind-altering. In fact, hemp was one of the first plants to be spun into usable fiber 10,000 years ago, and it can be made into all kinds of commercial items, from paper to plastics to insulation and even fuel and food. Now, alternatively, THC could also be derived from cannabis. That's the mind-altering psychoactive part of the plant. THC could also be called recreational cannabis. That's not what we're talking about today. We're talking about CBD, cannabidiol, which comes from a different strain of the plant. So CBD is what we might call medical cannabis, and it's been cited as helping people and pets with pain relief and having a lot of other positive health benefits, which we'll discuss later. So again, THC, mind-altering and recreational, and then CBD, not mind-altering, but rather medicinal, and what we're discussing here. The United States has quite a lengthy history with medicinal cannabis. In fact, our first president, George Washington, pushed for the growth of hemp as a cash crop, but for a long time, growth of the hemp industry had been suppressed. Now, a major turning point was last December, just 9 months ago, when Congress passed the Farm Bill that removed industrial hemp and its compounds like CBD from the purview of the Controlled Substances Act, which was a major win for CBD because that opened up the sale and distribution of medicinal cannabis. Now, you might have noticed an explosion in CBD retail businesses and products wherever you live, from skincare to shampoo to edibles that many say help them with things like anxiety and mood swings and even help people sleep. Even Coca-Cola is now considering introducing a CBD-infused beverage to its line of sodas. There are CBD dealers all over my hometown, and their retail stores are quite visible. So there's been a ton of buzz about this, and that's borne out in the numbers. CBD market growth has been just astounding, and there's one widely cited report that projects its sales growth to be 107% annually every single year through 2023. I'll put that link in the show notes for you. So it's something that's worth learning about because you're going to keep hearing more about it. In fact, maybe you've already been thinking, gosh, how could I get involved in this? Perhaps you might have expected that I would feature this topic on the show sooner. Well, this is the first time that we're discussing it because I didn't really have a trusted expert among my circle until more recently. So we'll talk to him shortly. Now, you'd probably want to be involved without you having to be the hemp farmer yourself. That's understood. So an all done for you way, but yet in a framework like we do at Get Rich Education, you'd probably want your investment backed with a hard asset and a nice cash flow stream for yourself. In fact, the cash flows are pretty predictable in today's case. Before we discuss that, when we talk about a real estate syndication like this, syndication just means aggregating many investors' money for a larger deal than you could do yourself. So let's discuss the pros and cons of a real estate syndication with turnkey real estate. So a syndication, which again is what enables you to come alongside an experienced operator, versus a piece of turnkey real estate where you're the sole owner, it comes down to pros and cons like comparing most anything else. The pluses of a turnkey real estate investment where you're the sole owner is that you have more control than you do in a syndication. With turnkey, you can raise the rent, approve or reject a new tenant, or refinance if mortgage interest rates drop. You have less control in a syndication, but you might see that as a good thing because you have less responsibility. Turnkey real estate with a loan often has 5 simultaneous profit centers, and many times syndications don't have that many. Both turnkey and syndication can provide cash flow. However, with a syndication where you make a loan on a project with that type, cash flows can be greater than they are with turnkeys. Syndications are nice because there's no decision making that you have to do. Do you want your tenant's refrigerator repaired or would you like it replaced? Those type of questions and decisions just don't come up for you at all in a syndication like they could with turnkey. That depends on your relationship with your property manager. With turnkey, you are invested for the long term. I'd say 4 to 7 years minimum to get all the benefits without transaction costs cutting into what you're doing too much. Syndications can have shorter timelines. Sometimes your money is only tied up as little as 6 months or 12 or 18 months in a syndication. Both turnkey and syndications are typically backed by hard assets. That's something good. A turnkey plus is that you're usually going to have more tax deductions. You could write off things like maintenance, interest payments, even your travel to it potentially. You have capital gains tax deferral. Even things like your property management fees are tax deductible with turnkeys. Some turnkey minuses are, sometimes things just happen, like your tenant paid the rent late. Now, the more turnkeys you own, the more that effect smooths out. With turnkeys, expenses are your responsibility, although you do have insurance coverage as a safety net for some of those things. Turnkeys, though, therefore, can be more work for your accountant than a syndication would be. With turnkeys, sometimes questions come up. You might get a tax notice in the mail, and for a second, you ask yourself, what is this even? Now, you might be stimulated by something like that because it's interesting to you to be involved and learn how the world and investing works. With a syndication, you're nearly always just receiving a monthly income check cut by the syndication's controller. That's it. It's simple. Now, in a syndication, often you must be an accredited investor in order to participate at all. And again, an accredited investor is a person that must have an annual income exceeding $200,000, or it can be $300,000 for joint income, or if you don't meet that, it can be a net worth of $1 million either individually yourself or jointly with your spouse. So maybe the easiest way for you to be an accredited investor is for you and your spouse together to have a net worth of at least $1 million. Most syndications have investment minimums of $50K to $100K, With turnkeys, it's smaller. It can even be less than $20,000 in some cases for you, with a 20% down payment on a single family income property, for example. Now, for syndications, there won't be a credit check or anything like that done because you're not trying to qualify for a loan. With a syndication, if you have the money and you're accredited, you're in. It doesn't take much more than that. But with turnkeys, if you're getting a mortgage, your credit is going to be checked, and your personal debt to income ratio can't exceed certain guidelines for the mortgage loan underwriter. You can furnish less documentation with the syndication than you can with turnkey. So those are some of the differences, some of the pros and cons of you investing and owning your own turnkey property versus coming alongside an experienced operator in a syndication. Now, in the syndication type that we're talking about today with CBD, you're making a loan. You're acting as the bank. You can expect a steady stream of income, and I think you're going to be pleasantly surprised when you learn how high the cash-on-cash return is from this particular CBD opportunity that we're discussing today. And since you're acting like the bank, if you don't get your steady, hassle-free stream of monthly income payments, then you would have a right to the underlying collateral. And as lucrative as the space for extracting hemp in CBD today is, no one wants to lose their precious in-demand processing equipment. Now, a UCC1, that's Uniform Commercial Code 1, that's just the name of a legal form that a creditor, you, files to give notice that may have an interest in the personal property of a debtor if that debtor doesn't make timely payments to you. Said another way, a UCC1 document formalizes your collateral. Now, today's guest used to deal with single-family homes in Dallas and elsewhere, but now single-family homes today, they still do cash flow with a 20% down payment in a ton of markets, but not so attractively in Dallas anymore like they did just 5 years ago. So he had to reinvent his business model. He already performed a money raise for CBD equipment on 2 facilities in Colorado and Kansas just in time for hemp harvesting season. In the United States, the hemp harvest takes place about this time of year or into October. Now, just a $1 million machine that helps turn the raw hemp plant, the biomass, into CBD oil, that can produce multiple millions of dollars for every harvest, maybe even $10 million per harvest. Yes, just from a single $1 million machine. So those are the multiples that we're talking about. So it's really the machines that provide a lot of cash yield. That investor that's loaning the money should feel pretty secure that they're going to get paid because the operator has a strong incentive to keep that highly profitable equipment to themselves. That's some insurance on your investment dollar there. The opportunity is that there's more and more hemp biomass on the market and not enough extraction equipment to make the CBD oil that goes into these high demand products. So within this industry, you want to find the segment of it that's poised to have more demand than supply. Let's talk about hemp and CBD with today's guest, one whom you should find pretty familiar by now. I'd like to welcome back to the show a friend of Get Rich Education. He's the host of the Real Estate Cowboys podcast. Last year, he asked me to write the foreword for his real estate book that he had published called The Passive Income Guide. And you might have seen he and I in a number of real estate videos together the last few years, and you've heard him here on the show before as well. Welcome back to Get Rich Education from their Dallas, Texas headquarters, American Real Estate Investments Managing Partner, John Larson.
Keith, thanks so much for having me back. It's a pleasure.
John, you've had a great journey. You moved from Michigan to Dallas 5 years ago because that's where the opportunity was. And for a long time, you're kind of known as the single-family turnkey home guy, but those returns became less attractive. You do a great job of always being in search of yield for investors. So what you found are private money lending opportunities. So tell us more about that pivot point.
Yeah, that's exactly right. Investors who are interested in single family homes, obviously they know that cap rates have becoming more and more compressed over the years. The fact that the real estate market just, keeps booming year over year since coming out of the last recession. And so Dallas, that used to be a solid cash flow market, call it maybe 5 years ago when I moved down here, it's just not the same anymore. The prices keep going up, which causes the property taxes to go up. The property taxes are already high down here in Texas because there is no state income tax. So due to that, it's become very, very difficult to find good single family opportunities in good neighborhoods that are going to consistently attract good tenants, because that's what we want for our investors, are safe investments, number one, that will then provide cash flow. But due to the rising prices and the rising taxes, the rents can only go so high in a lot of these neighborhoods. It's pretty much kind of squeezes us out of that market. And so we've pivoted to a more solid cash flow play, a more consistent, stable, I guess to say predictable cash flow play through private lending and going after multifamily opportunities out here in Dallas and commercial opportunities out here in Dallas, because both of those opportunities are still highly sought after. Dallas-Fort Worth is home to the most corporate headquarters in America. So we have businesses moving here every day and people moving here every day. On an average of 150,000 people per year move to the DFW area. So there is a strong demand for not only single family, but multifamily and commercial. So we kind of pivoted over to that side. And now we give our investors the opportunity to take the role of the bank, hold first lien on a hard asset, and then receive a monthly dividend each month. So they know what cash flow they're getting each month to the penny.
Predictability.
Exactly. And it's been a huge success. So very happy with the past, I call it. Since May of last year, we started our private lending program, and it's been a very, very big success and big hit with our investors.
So over the last 5 to 8 years in Dallas with single family homes, with purchase prices and asking prices rising faster than rents, coming up with profit and loss projections of minus $160 for cash flow for investors really just didn't work out. Of course, there are a lot of ways you're paid in real estate investing, but a lot of investors are cash flow centric. That's what helps secure the mortgage in the property. But you've had more success in finding that now you can go ahead and provide a strong return, oftentimes a stronger cash on cash return than you can with turnkey single family rental homes by syndicating lending opportunities. And all that really means is that you're aggregating investors' capital for a loan. So that way investors, rather than being on the equity side, can invest in the debt side. So investors basically have the opportunity to be the bank. Now, when one makes a loan, you can be the bank for all sorts of things. It isn't just real estate. Sometimes it's for a business startup, or sometimes it's for something like commercial equipment. Now, something like equipment is not real estate. It's not dirt. But if it accomplishes the same thing for an investor, if it's a hard asset and it cash flows, something like that is attractive to a lot of investors.
Oh, absolutely. And if you've been following us, you know that we have got into the CBD business. I saw last year the opportunity that was on the horizon with the passing of the Farm Bill back in December, which basically took hemp off the banned substance list. Right. And gave all the farmers in America the opportunity to grow this crop that is highly profitable right now. So it gave a huge boost to the agricultural economy, which I believe that was a pretty smart move by our president there. But I knew that that was a huge, huge opportunity. And I knew that going into 2019, the CBD business would be burgeoning, which you see in many reports, people are likening it to our generation's gold rush. And so what we wanted to do was position ourselves as a company that could generate some serious revenue from this business. And we found that because of the passing of the Farm Bill in December, more and more hemp was going to be grown in the US, right? So there's going to be more hemp biomass grown and available on the market in 2019. And we found that the bottleneck was definitely going to be the extraction side of the business. That means taking the raw plant and converting it to, or extracting the CBD oil and other cannabinoids that are in that plant into a crude oil. And then it takes a further refinement process from there. I saw, myself and my partners, we saw that the bottleneck was for sure going to be in that extraction side of the business. So we have now positioned ourselves through our private lending program to buy 2 extractors that can extract each 5,000 pounds per day. So we're going to have a really, really solid extraction service for these farmers that are growing this hemp biomass. And we're basically going to be assisting with that bottleneck and taking advantage of that bottleneck to then in turn generate cash flow from these machines to pay back our investors. And really the loan amount on these machines is so insignificant when you compare it to the amount of revenue that can be generated from these machines, which I believe is going to be into this year. Based on last year, I believe that it's going to be somewhere around $20 an input pound is what we'll be able to charge for tolling. They call it tolling this hemp biomass through our equipment and converting it to a crude oil.
But that goes ahead and provides a substantial value add to that end product, or once that raw hemp is passed through that extractor. So just to back up for a moment, about a year and a half ago, you had helped investors get in on the debt side rather than the equity side by doing some commercial lending in and around Dallas especially, but elsewhere. And you also began to do loans for extraction equipment in the United States several months ago. Now you've taken this equipment, and we want to emphasize that we're basically want to tell people that we're talking about not recreational cannabis here where you get a high, but we're talking about medical cannabis. So what's really the buzz and the boom all about this? Well, when the Farm Bill went through, that enabled farmers to now grow hemp across the United States. Previously, it had been a somewhat lesser grown crop, and now that's changing. Some people liken CBD as an alternative to big pharma, and CBD helps people manage stress and anxiety, reduce pain and inflammation, improve your sleep, achieve clarity without a high because it does not have that psychoactive THC component there in CBD at all. Tell us about how you found the opportunity and why the opportunity seems to be in this extraction more so than the growing of the hemp out in fields.
There was already a bottleneck, Keith, in 2018 for people that were getting into the CBD industry on the extraction side. And that was before the Farm Bill passed and took hemp off the banned substance list. We knew going into 2019, the amount of biomass available on the market was going to far exceed the amount of extraction solutions that are available. So usually anytime you enter a market or a business or any sort of opportunity, you try and take advantage of some sort of bottleneck and fill that need. And so that's what we did. That's exactly why we went to our investors and said, hey, I understand this is a little outside of our normal box because we're a real estate company. But to be honest, with the nature of the market right now, I just feel like there's a very small margin for error on a lot of these real estate opportunities because the equity it squoze a little bit. It's compressed. And so your margin for error on these deals is very slim. Whereas with this extraction equipment, I knew it was a no-brainer that we were going to be able to charge at least $20 an input pound for this hemp biomass, that all these farmers and all these companies who have these retail CBD products are going to need that extraction service. And I knew that there was not going to be enough extraction machines on the market to process the amount of hemp that is going to be on the market today. So that's basically why we went to the investor and said, hey, let's loan money on this equipment, still file lien on the equipment in the form of the UCC1. So their loan is still being collateralized. They still hold claim to that equipment until the loan is paid off. But two extraction machines.
A UCC1, the document that formalizes the collateralization of that equipment for the investor. If that investor didn't get paid back, that gives them the right to that property, which is equipment in this case.
Exactly. And the loan amount, like I was saying earlier, is so insignificant to the amount of predictable cash flow. Once again, I'm going to use the word predictable that these machines generate. For example, let's say the two machines were each $1 million a piece. That's a $2 million loan on the equipment itself. If we process 100,000 pounds of hemp biomass through these two machines, which if I can do 10,000 pounds a day, that's only going to take me 10 days to do that. And I toll that 100,000 pounds, that's at $20 an input pound, that's $2 million right there. Yeah. So really the term was just basically to order the equipment from China, get the equipment set up, do some test runs, get the equipment dialed in. And then once we turn those machines on, we're going to be able to pay our investors back almost immediately.
Yeah, because this is so profitable. That was rather forward thinking on the hemp extraction equipment because people can grow hemp. In fact, it's one of the fastest growing plants there is. But to have the extraction equipment and the intellectual property, that's not as easy for someone else just to go do, hence the bottleneck.
Exactly. And the reason why there's not as many extraction solutions on the market, there's a lot of refinement solutions. So once the extraction method is done, you take the crude oil from the plant. Well, then it has to go through an extra step. It has to go through a isolation process, that's isolating the CBD molecule, which basically turns it into a white fine powder, or it can go into a distillate, right? Basically an oil. That equipment is actually a little less expensive to purchase, and you don't have to jump through as many hoops with whatever city or county your facility is set up in. The extraction method is a little bit more difficult to get online. One, the equipment's more expensive, but two, for a solid hemp extraction method, you have to use some sort of solvent. And what we found in today's market for hemp, we found that ethanol is the best solvent for this extraction method. And, ethanol is combustible. If you're operating within the city limits of whatever city it is, you're going to be jumping through some hoops with the fire department and the city and the county and so on and so forth to make sure your building's up to code. Because if something were to happen and heaven forbid, the equipment explodes, you need to be up to code. You need to make sure that you are set up. Your building has a certain amount of depth on the walls and so on and so forth. So it's not as easy to get these extraction facilities online is basically what I'm trying to say.
Yeah, and this certainly is a lucrative space. There is just too much money to be made to lose your equipment. The money that you can generate is just multiples greater than the loan. So you raise money, you put your investors in first lien position, you collateralize the equipment through a UCC1 filing. That way the investor's protected and they have a lien on the equipment. The lender has a right to the equipment if they don't get paid. We're going to talk more about where the opportunity therein lies for you for profitability in an all-done-for-you way with CBD. You're listening to Get Rich Education. Our guest is John Larson. More when we come back. I'm your host, Keith Weinhold.
Would you like to know the easiest way to create wealth and passive income with real estate? This is Marco Santarelli with Norada Real Estate Investments. Now you can access the best deals without the stress or hassle of having to find, renovate, or manage those properties. We save you time by providing you with passive income investment properties in some of the best U.S. markets. Learn more by downloading your free copy of The Ultimate Guide to Passive Real Estate Investing. There's no obligation and nothing to buy. Simply visit passiverealestateguide.com and get your free copy today. That's passiverealestateguide.com.
Countless property investors get killed with maintenance costs, but that's far less likely when you buy brand new construction. Let me tell you about JWB Real Estate Capital in Jacksonville, Florida. They pioneered the build-to-rent model where you can invest in new construction, turnkey rental properties. That's why JWB was featured on the front page of the Wall Street Journal. To learn more and see inventory, go to newconstructionturnkey.com.
This is Norada Real Estate's Marco Santarelli. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
You're listening to the show that's created more financial freedom for busy people just like you than nearly any show in the world. This is Get Rich Education. We're talking with John Larson from American Real Estate Investments. John, this opportunity gives people a predictable cash flow stream with something that's collateralized and allows them to play. I think increasingly a number of people are like, I want to be involved in profiting in the CBD industry, but yet I want to maintain passivity. So tell us more about that and really this gold rush. Some people liken CBD to this generation's gold rush. Tell us more.
Yeah, absolutely. I've seen that in numerous articles where they've related this CBD craze as the gold rush of our generation. And first, when I unveiled the opportunity, I was a little hesitant. I didn't know how my investors were going to react to it. But really, I have so many investors, Keith, from California, that when I mentioned CBD, they were just already on board with it. They were like, oh, absolutely. I've been giving my kids CBD. I take it. My pets take it. And so they saw the opportunity big time. I think what they liked most about it is, traditionally on our investment opportunities through private lending, we're paying 10.5% to 12%. We were offering 12% on our CBD opportunity. And they were obviously very thrilled with that because it's a high rate of return.
That's a strong cash on cash return.
Exactly. And I think they looked at it as a way to kind of play in the cannabis space, the growing cannabidiol space, which is CBD. And they thought, wow, I can see double-digit returns in the form of 12% annual, which is paid out to me in a monthly dividend. And it's pretty much just wrapped up in a bow for me. I don't have to really do any work. I just review a private placement memorandum. I read over the deal. I look at the marketing package and I sign on the dotted line. And basically when they raise the funds to take down the equipment or whatever it may be, I start earning a monthly check. So it was a way for them to play in the space in a very, very passive manner.
Now, in the United States, hemp is grown and it's harvested annually, where that raw product is taken and extracted into crude CBD oil, like you were describing earlier. But you have the right relationship in a place where one can get a harvest more than just annually, and you can make it more profitable. Tell us about that.
That's a great point to bring up. So if your listeners have been following you and I, they know that we've been investing in Belize for some time. And I've been investing down there in the form of vacation rentals. Had a strategic partner down there for private island development. So we're involved in some of those things. We brought some of your listeners down on a couple of tours. And so through that time, we developed good relationships with the government, the parliament in Belize. And so we approached our contacts down there in the government and said, hey, we're expanding in the CBD space up in the US. What do you think about the growth of hemp in Belize? And they were extremely open to it. Belize really likes to copy whatever America's doing, right? And they saw the opportunity as well up in America. So right now, we've purchased an 1,800 acre farm down in Belize. We are about to start planting our first 200 acres of hemp. We're just finishing up our greenhouses, getting lights for the greenhouses. We still need, some operational capital to get an 1,800 acre farm ready to go in terms of like growing hemp at a high rate. But the 200 acres is a great way to just kind of test it out. With Belize, as you know, Keith, dollars locked in 2-to-1. They speak English there. Contracts are in English. For them to give us the opportunity to be the first hemp farm in Belize, I think was huge because yes, we can get multiple harvests down in a tropical climate like that.
This is brilliant. I love what you're doing here.
Yeah, thank you so much. And there's other big players in this industry who have gone to Colombia or Costa Rica or Puerto Rico and are also growing hemp due to the fact that you just have cheaper labor costs, cheaper operational costs, and you can get multiple harvests throughout the year. So it kind of puts you ahead of the curve in this industry where you see everybody trying to get in and trying to come up with a new retail brand or a new product or whatever it may be. This gives us a huge, huge competitive advantage by being the first hemp farm in Belize. So also when other hemp farms follow, we're also getting an extractor and starting to raise for an extractor down in Belize as well, to where we've already set it up with the Belizean government that we'll have the pharmaceutical license there. And anybody who grows hemp in Belize will have to go to us for the extraction method. So that is a huge, huge opportunity for us moving forward.
And Belize is a country you and I are quite familiar with. You and I have done real estate tours there. I personally have owned real estate in Belize since 2013. A lot of people don't realize that it's only a 2-hour flight from Houston. It is very close to the U.S. They have fertile soil, both a low cost of land and a low cost of labor. But with the CBD, the really important thing is you don't just have that one harvest like you have in the United States. You can have 3 or even more hemp harvests in Belize.
Oh, yeah. And it's a game changer. And I mean, honestly, we even have some outfits from the U.S. right now, since we have 1,800 acres there, which some of it, there's some housing on that acreage. There's some livestock on that acreage. There's some orange groves, some teak trees, mahogany trees. So it's not like we're using the entire 1,800 acres for hemp, but I would say we have a good 1,200 acres carved out just for the growth of hemp. So we've had some outfits from the U.S. trying to piggyback off of what we're doing down there right now and asking if they can just actually buy acreage off of us or lease acreage off of us to also grow hemp because they see that opportunity for multiple harvests as well. And like I said, in a business where everybody's trying to get in, you really have to do some things and things outside of the box to give yourself a competitive advantage and keep you in the game moving forward. And I think we've done that.
So since this is an opportunity for loans and for one to generate passive income on the equipment, tell us more about the equipment that's going to be in use there and these other farm operators that may indeed then need to use your equipment.
So the same deal, the extraction equipment would be the first, pretty much all we need to do is get there. We are about to approach our private lenders for this opportunity in Belize, but the main thing what we want to do is get that extraction method. As I said earlier, the refinement equipment is not as expensive. It's not as big. It's not as difficult to run and set up. So once we get the extraction method down there, we could do a lot of different things, Keith. We could actually export the biomass and just sell the biomass as is. But I believe the best thing to do here is to take the biomass, run it through the extractor, then take it through the refinement method and either sell the isolate or distillate, that active ingredient, back to the US or worldwide. I mean, CBD is huge in Europe. It's becoming huge in China. It's obviously gaining huge popularity up here in the US. So we have a lot of different exit strategies for the either isolate or distillate once we get it to that point. So, and also it'll be a lot easier to ship that stuff. Instead of barreling up a bunch of plants, right, raw hemp and trying to ship it around the world, it's easier to just kind of take it to that active ingredient and then ship from there. So that's pretty much our plan at this point.
So the cost of land is relatively low there. That's why the loan is needed for the equipment.
Exactly. Right.
So for the investor, this pays back relatively quickly. Tell us more about the structure for the investor and what it looks like for them and this cash flow stream that they're in it for.
So this typically all of our private lending opportunities are either a year to 18 months. we might be looking at might be 2 years, but this one specifically is only going to be a year just because we're about to put seeds in the ground. Like I said, we need a little bit more of a boost down there in terms of getting lighting for the greenhouses, things of that nature. So we have to start the seeds in the greenhouse and you take them out to the field and you plant them. But we're ready to do that once we, like I said, finish out this raise. We're ready to start planting seeds in the ground, and hemp in that environment is going to grow like a weed very quickly. and so the opportunity is pretty much, it's going to be a year term on this deal. This opportunity is going to pay the most that we've ever offered. It's going to be 15%. And I did that because obviously there's a little bit of added risk on this opportunity because the investors are investing outside of the country. But you'll see we have a very clean video that we're going to be unveiling, showing you what we need the funds for, showing you that greenhouse is already being built, land is being tilled. There's work being done. This is a workable farm at this point. And then with the extractor that we're going to raise the money for, that can also be filed. That can also have a lien on it in the form of a UCC1, even in Belize. That's another benefit of working in Belize. The laws and the way that business is conducted is very, very similar to the US. So the investors will still hold lien to that property, although it's outside the country. But like I said, for that added bit of risk, I'm willing to pay a 15% annual return on this deal. And that's the most that we've ever offered.
That is a remarkably good return. That is not something you can expect from turnkey real estate. For private money lending deals, I know people that are in second lien position and get a rate of return that's 15%. You're in first lien position with that 15% cash on cash return, 12 month term. Let us know, can investors use either cash or IRAs?
Cash or IRAs is preferred. The IRA is probably the most preferred method with private lending because those dividends are going back to you either tax-free or tax-deferred. Whereas, hey, if you're in the 40% tax bracket, you're going to have to pay taxes on the interest that you're receiving on the debt side. But at 15%, you're still making a really, really solid return on your money, even after you pay the tax man. Great, great opportunity. Really, really excited about it. And yeah, like you said, I mean, on the single family side, there is really no opportunities from the cash flow perspective that are going to get you returns as high as 15%.
Right. One would need to put substantial sweat equity into a place to even approach a cash on cash return like that. For the lending on the extraction equipment, must one be accredited? And what's the minimum investment amount?
All of our opportunities, because of this is a Regulation D filing, we fly under the 506C rule. Because I have my own podcast. I go on podcasts like yours and the Real Estate Guys and other popular podcasts out there. And we talk about these opportunities. So since we're publicly soliciting them, all investors must be accredited to participate. And the minimum investment amount is $50,000.
To this point, you've been doing this for almost a year and a half with private money lending opportunities. And to this point, everyone has received interest payments to the penny.
Yep, month over month. In Q1 of 2020, a lot of deals are going to start maturing. A lot of loans are going to start maturing. Some deals are going to start paying back. And the beautiful thing about this private lending program, too, is when you do get that return of capital, you'll have an opportunity to reinvest it with us on another deal and just kind of keep the money working for you in a passive manner. And I'll tell you, my IRA investors especially just love this opportunity. On equity deals, although I believe, with equity, there's very, very slim and the margin for error. I hate to go back to that, but that's the truth. With an equity syndication, you do get to take advantage of the tax benefits. And I would never rule out doing an equity syndication. But with the debt side, the investors really love it because, like I said, they're seeing a return on their money immediately. And it's just in a very, very passive form.
Yeah, it's really hands off. Well, if you want to learn more, get the report on this opportunity at getricheducation.com/lending. John, let us know what an investor can expect to see in that report.
Well, you're going to see basically just the overview of private lending, how it works, try and simplify it for the investor. And then also you're going to see key data points on this actual deal that we have going on here in Belize and the opportunity that we have in Belize. So if they're interested in learning more about this opportunity and receiving 15% annual on their money, I would definitely download the report and take a look at it.
Check out that report. Educate yourself before you invest at getricheducation.com/lending. John, it's been great having you here back on the show.
Thanks so much, Keith. Always a pleasure.
Yeah, great to hear from John again. Over the last 3 years, you've been seeing he and I in videos together as we made real estate field trips to Dallas, St. Louis, and Belize. John is a guy that really sets himself apart as an opportunist, I think, and really flexible real estate entrepreneur. And he's been building his track record as a syndicator. being around John in business as much as I have been, you can tell in life and in business who the givers are and who the takers are. And John is definitely a giver. It's really one of the first things I noticed about him when we met 3 years ago in Dallas. So yeah, 15% cash yield from the CBD space and a $50,000 minimum investment amount for accredited investors. That's going to be right for a lot of people. For more than just your IRA or your EQRP funds, say you've got $50,000 or $100,000 of liquidity accumulated, and you won't need that money for a year, and you want a great cash return in the meantime, well, this shorter term private lending could be a great answer. Now, the math is that every $50,000 invested at a 15% return, that yields $7,500 in cash per annum for you, and you're receiving a cash flow check from John's controller then for $625 landing in your account every month. Of course, if you invest $100K, that's $1,250 in monthly cash flow. That's the math. I think this really answers the question, how could I get a return from the CBD boom in an all-done-for-you way that generates cash flow today and is collateralized with a hard asset? That's exactly what this does. Remember, a lot of times you don't want to be investing in what's normal because what's normal is not at all exceptional. The best investments aren't always the simple ones, but there is a correlation there. Oftentimes, I think to myself when I'm out there investing, I'm thinking, could I describe this investment that I'm participating in to an uninitiated, say, coworker in just one sentence? If a coworker asked about what this investment is, yeah, you totally could in this case. You could tell that coworker about your 15% cash-on-cash return by saying, I made a 1-year loan for equipment that helps make CBD products. That's it. It is different. Yes, it is. And that's often exactly why you're profitable. It's also pretty simple. As an investor, be mindful that your income stream is more durable when it's more diverse. And this is diverse in a few ways here. You're investing on the debt side rather than the equity side. And this real estate is agricultural rather than residential. And really then, it's completely uncorrelated with the U.S. housing market, stock market, bond market, oil market, precious metals market, uncorrelated with most everything else. Two basic human needs are housing and food because people need to live somewhere and humans need calories. That's not changing anytime soon, and that's why it constitutes most of what we talk about here at Get Rich Education. There'll always be some demand for residential and agricultural. That's why I'm a fan of both. Next week, Darren Bloomquist will be back on the show with me to discuss U.S. housing trends. 4 weeks ago, you'll remember that Darren and I discussed housing appreciation, foreclosures, and migration. Next week, it's the latest on different housing trends. Thanks to John Larson today. As always, educate yourself. Your report on CBD investing for strong 15% cash-on-cash returns is at getricheducation.com/lending. Start there. That report will both answer some of your questions and allow you to get things rolling with the provider should you so choose. And if you're listening to this months after this episode releases, this offering will almost certainly be funded already. So then what you would receive are details on the current lending offering from this same provider and not this one. If you happen to be an accredited investor, land at getricheducation.com/lending. Until next week, I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.